Hello everybody, welcome back for another video. I hope you're all doing well and that you are all having a great day to start things off. Nouriel Roubini, a widely recognized economist and a professor at Stern School, has said that the decline in the value of Ethereum was expected due to its lack of active decentralized applications, or dApps. He said, "No wonder Ethereum is collapsing. 75% of dApps are CryptoKitties, scammy Ponzi pyramid schemes, and casino games. The other 25% are DEX, or decentralized exchanges, that no one uses, as 99% of transactions are on centralized exchanges, and 99% of cryptocurrencies have already lost 99% of their value," end quote. That is quite brutal. In the early days of the internet and the web, the vast majority of platforms with extremely simple applications such as email and data had very difficult times trying to do anything of the sort. Even sending an email in the very early days was extremely difficult. As decades passed and infrastructure supporting the web, including the hardware of computers, cloud computing, and software drastically improved, the web evolved into the base protocol for data sharing, basically powering virtually everything ranging from video streaming to financial services. I may have said this before in another video. For those who are not old enough or were not here around the time when dial-up was a thing, the internet was horrible. It was the slowest thing in the entire world. If someone had sent you a photo of them on their vacation, it would probably have taken you around 4 to 5 minutes just to download a portion of the actual photo. And one of the major arguments against the internet was, why would anybody want to use the internet when they have phone or when they have normal mail? And that's not email. And I know it sounds ridiculous now because of how quick the world is, but the argument was, why would you want to talk to someone through a chat or somewhere online when you couldn't see their face or hear their voice? All you saw was text. They said no one would want this. You can pick up the telephone. This is the easiest way to communicate with people. It's fast. It's efficient. No one is ever going to end up using the internet, especially you can actually find things on YouTube of like something from, it had to be like 94, maybe 93, 95. Where people on the news are actually talking about that they tried this new thing called the internet. It just doesn't work. They tried sending an email. They couldn't figure it out. They don't know how to type in the web addresses. Everything is way too confusing. I'd rather just send my mother a mail. And that's how the world kind of was. And this is exactly, we're at this point right now, it seems, in the cryptocurrency space. Cryptocurrencies as an asset class in the Ethereum protocol as a decentralized computing network are still in their infancy. Ethereum is only able to process about 10 to 12 transactions per second on its mainnet, and as such, the type of services, or dApps, could provide is extremely limited. Improvements on the protocol level are being implemented at an exponential rate. Vitalik Buterin, the co-creator of Ethereum, has said that the implementation of second-layer solutions such as sharding and plasma could potentially increase the transaction capacity of Ethereum to 1 million transactions per second, which we will be able to support IoT and financial networks. Currently, dApps and simple concepts like CryptoKitties dominate the space, and decentralized cryptocurrency exchanges are nowhere close to competing against centralized platforms. I tried using a couple of decentralized exchanges before. They were absolutely horrible. They were very slow. You weren't able to choose your own password, and some of them you couldn't even copy and paste. You weren't able to click around. I don't remember the name of one of them at all. There was one that after like 5 minutes, I regretted even touching it. Every time you clicked on a new button, so if you were trying to go to how much money you had, or if you were trying to go to like the exchange part, if you were trying to do something else, every single time you had to re-enter your password. You were logged out and had to re-log back in, and you had to keep copy and pasting. It was just a complete mess. So I had big hopes for decentralized exchanges many months ago. But every time a new one comes out, they just kind of get worse and worse. And I think maybe just the infrastructure just kind of isn't there yet. However, decentralized computing ecosystems and smart contract protocols based on public blockchains such as Ethereum, Cardano, and EOS are less than 3 years old. Even younger, if you really, Cardano is maybe like a year. EOS, depending on when you want to think about when it came to life, is only like 3 or 4 months old as well. I mean, we've seen a lot of hate specifically around Ethereum. I'm not exactly sure what it was. The last couple of months, we saw a lot of people who were praising Ethereum as this amazing thing and it was going to completely change the world. And for some reason, everyone has lost faith in it at the exact same time. Maybe they know something that we do not know. Maybe they have also gotten tired of waiting for the upgrades that we were promised since 2016. Maybe they shouldn't have told us about the updates in 2016. Maybe we should have just kind of been where it was. I don't know if I spoke about this yesterday. I'm pretty sure there was an article yesterday that was talking about why Ethereum had lost so much value. And it was saying because not only are the projects dying on top of it, but the other people who funded their project funded it in Ethereum, and now they're all trying to sell just to try and recoup some of their profits that they could have made or would have made had the price of Ethereum been a little higher. Point is, at some point, the internet did get quicker. The internet got faster. Everyone loved the internet, and I think even if it takes around 2 years, I think Ethereum will eventually get there. But at this moment, I've kind of not lost hope, but I'm almost certain if this continues going this way until if this continues to the end of this year, the next time we do have some type of significant bull run, I kind of feel like Cardano, EOS, XRP, and maybe like 2 other privacy coins are going to try and fight it out for the number 2 spot, because Ethereum just isn't really holding on anymore. And it's a little sad. They'll get it eventually, but I don't know if they'll have enough time to remain in the spot where they are right now. Next up, Stellar is in the news. A long rumored acquisition that finds 2 of the crypto industry's leading entrepreneurs teaming to back the world's 6th largest blockchain has been confirmed. Announced on Monday, Chain, which raised more than $40 million from financial institutions, including Visa and NASDAQ, is in the process of helping define the narrative for business interest in the technology through its partnerships and stage appearances, has been acquired in an undisclosed deal by Lightyear.io, a startup building on the Stellar protocol. Closed officially the 5th of September, the deal will find both brands combining to form a new entity called Interstellar, to be helmed by former RRE venture partner and Chain CEO Adam Ludwin, who will serve as Interstellar's CEO, and Jed McCaleb, the creator of the XRP and Stellar protocols, who will be acting CTO. The combined company will retain 100% of Chain's employees, according to Ludwin, including co-founder Devin Gundry, who will remain on as Chief Product Officer. All told, about 60 employees are now employed by Interstellar. They talk about the terms of it. Not really that important. In fact, Ludwin went so far as to suggest that the acquisition by Lightyear shouldn't be viewed as a change in direction, even though Chain's work focused largely on private blockchains. That's them patting themselves on the back. In Ludwin's word, Chain got stellar envy when it realized the open source project was succeeding on its goal of creating a platform that could excel at asset issuance, albeit largely with startups. At the time, McCaleb, Ludwin said, encountered a reciprocal problem created in 2014 and managed by the nonprofit Stellar Development Fund or Foundation. The protocol's coders were likely looking for a link to institutions that could help them commercialize their work. That said, also notable is that Ludwin said that Interstellar does not indeed or intend to play an active role in the market for the Stellar cryptocurrency, which is XLM, saying that Interstellar is a software play. The article continues actually going on for a very long time, talking about how they were friends, courting each other, how they're trying to separate themselves from the idea of Ripple, and that they Ripple has focused on, it says it somewhere, like banks and the other institutions, and Stellar's trying to focus on, I think Stellar is trying to become like another EOS and Ethereum, I think, because the blockchain apparently seems to be quick enough that they're actually able to handle the transactions. So this is where I think that they are going, because the original idea for Stellar was that they wanted to also be exactly like Ripple and or XRP. And even for Interstellar, which is very good news, they also have noted that they are not going to be using the token, but they just will be using the Stellar blockchain. But still very good news that the cryptocurrency space is expanding and moving along. Next up, the European Commission, the executive body that proposes legalization or legislation for the EU, will this year conclude a regulatory assessment for the governance of crypto assets, because they are here to stay. This was said by a high-level official. Speaking at a press conference after a meeting of the Economic and Financial Affairs Council last Friday, Valdis Dombrovskis, Vice President of the European Commission, said member states are supportive of moves to chart regulations governing the cryptocurrency industry in the economic region. He said, and I quote, "We also had a good exchange of views on crypto assets. We see that crypto assets are here to stay. Despite the recent turbulence, the market continues to grow," end quote. Further, He suggested that ICOs have potential to become a viable form of alternate financing. He said already last year, ICOs helped raise over $6 billion in funding, and this year this figure will be substantially bigger, end quote. To make the most out of this potential, Dombrovskis said that the challenge right now is how to categorize and classify crypto assets, and whether the European Union should use existing financial market rules or create a set of dedicated regulations for cryptocurrencies. He said in context, we are currently working together with European supervisory authorities on what we call regulatory mapping of crypto assets to answer exactly these questions. This will provide a solid ground to build on and to decide on future steps in the area, end quote. It's interesting to note how different the idea, or like how we've seen other parts of the world completely hate ICOs, but here is or at least a member of the European Commission, boasting about how good they are and how nice they are and how they raise so much money and how if you regulate them properly, this could be a great a way to fund projects, which is a complete turnaround from what we've seen, especially in the United States, where they're trying to get STOs being a larger thing as opposed to ICOs. Very interesting to see the difference in perspective of where the crypto space is going to go, or what could provide the cryptocurrency space with growth. I find that quite interesting. I always love when anyone in power, I'll say it that way, kind of acknowledges not even that blockchain is here to stay, because that was a thing 2 or 3 years ago for those who were not in the cryptocurrency space. The entire argument is that we don't need crypto assets, we need blockchain, and this has been a complete 180. Everyone's completely changed, and now they're also acknowledging crypto assets, which is incredibly interesting, because if you pay attention, these are the same exact countries and companies and entities and governments who said before that they hated cryptocurrencies, but now they're all not buddy-buddy with them. They're still going to try to regulate them, but pay attention to, once again, the countries and the regions that are allowing cryptos to grow. I think that's the nicest way of saying it. I've said this before. European Union so far has been relatively okay depending on which country you're in. Some countries are a lot more favorable to crypto than others, but I have a strong feeling for the beginning they're not going to have any idea what to do with any of this. I think we're going to fall into the same exact categories as we did for stocks and bonds and mutual funds and things like that, as far as like taxation and or having to report what you have and where it's going and when this is, blah, 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 blah. But very good news, and I'm pretty sure, I think there's some other, if I'm not mistaken, I think something is happening in November, like some type of major meeting between world governments, and that's also supposed to be something very significant, and probably maybe we'll have proper paperwork or something so that people within the European Union know exactly what they're doing, because I'm pretty sure there's also regulatory uncertainty, or people aren't really 100% sure what they're supposed to do with cryptocurrencies. Next up, this is actually quite interesting. Investors may now have a new way of purchasing cryptocurrencies without actually having to own them. Manhattan, New York-based banking giant Citigroup has reportedly developed a product which could reduce the risk hedge funds and asset management firms are exposing to when they invest in cryptocurrencies. According to Business Insider, the instrument, which was jointly developed by Citigroup's Depository Receipt Services team and the Capital Markets Organization team, is known as Digital Asset Receipt. While Citigroup will issue the digital asset receipt, a custodian will be responsible for holding the cryptocurrency assets. Upon issuing the receipt, Wall Street clearing and settlement services firm Depository Trust and Clearing Group will then be informed by the financial giant. This is expected to offer legitimacy to the fledgling asset class, as well as provide investors with a new way of tracking an investment within a familiar system. Spoke about that before. The idea is that everyone who's looking to get into crypto has no idea where to go. They can't figure out where to actually put their money. So they need something that is legitimate, well-known, in order to be able to deal with cryptocurrencies, and this is kind of the idea behind it. Digital Asset Receipt works in a similar way to the American Depository Receipt, or an ADR, which allows investors in the United States to own foreign stocks that are not traded on domestic exchanges. With the ADR, U.S. citizens and residents are able to invest in foreign stocks, where a bank acts as a custodian while the investors issued with a depository receipt Having started issuing ADRs around 9 decades ago, Citigroup is now one of the biggest issuers of American depository receipts in the world. For those who have never walked around New York or have never had the chance to be in New York, Citi is all over the place. They are very dominant. So it's very interesting that they're also going to be getting into the cryptocurrency space. But the weird part is that it's another one of these, you can have it, but you won't have to touch it kind of things. Like, you will own the crypto, but it won't really be yours because it'll be held by the actual bank and their management firms, which is kind of weird. But this is what we were talking about before when it came to the entire thing with the New York Stock Exchange getting into it. This was one of the fears, is that people would be able to get into the market without actually having to be in the market. Someone would give you more like a receipt, a piece of paper, probably on the computer, digital, that says that you own something that you don't actually own. And then the issue is that how many of these can they print out or issue to people, even though they probably don't even have the amount of crypto assets that they're actually giving out. Still interesting that Citi has decided to jump on the crypto train. This is actually very big news depending on who you ask, because any of the major players or major older financial players who even touch crypto at all is seen as very significant in some type of legitimacy that they are then shining onto us, as we are desperate for their final say in the matter of what we should be able to do with our money. That's actually what a lot of people think. Anyway, moving on. I'm not going to read through the entire thing. It's just very interesting. A new report published on the 7th of September by the U.S. Foundation for Defense of Democracies, or the FDD, Center of Sanctions and Illicit Finance, or the CSIF, shows that digital currencies are ill-suited for financing terrorist groups. This was actually something that was done. So pretty much they had a report where they were looking into if crypto can actually fund terrorism, or if terrorist groups and or cells plan on using cryptocurrencies, because for 2 or 3 years now, since they've gotten away from the argument about volatility and no one's going to get into the cryptocurrency space and crypto is going to die, as all these other major institutions have started getting into cryptocurrencies, the main argument has been now money laundering and terrorists. Terrorists are going to use it. This is all terrorists want. Terrorists want nothing more than to use Bitcoin or Monero or any other coin so that they can kind of get around all of this. And they concluded or found out that apparently they were getting only around $500 worth of Bitcoin because people weren't simply sending it. The people who are actually part of these groups and or cells have no idea how to send cryptocurrencies. And they said another really big reason is that if they get large amounts of funding, because how do I say this? You have to be very computer savvy. This is what they ascertained from all of this, is that if you are not computer savvy enough, that their money ended up getting stolen from several terrorist organizations, which at some point they were like, okay, we don't want this to happen again. So they just decided to use dollars or whatever they were using before. Like I said, not going to really even read through it because it's not that I don't need to say all, especially like there's a lot of interesting names floating around here. The point is they're constantly coming out with these studies over and over that are kind of telling us that crypto's not dangerous, that it's not being used by terrorists, that people aren't using it for illicit activities, that even since Silk Road collapsed, no one's using it to buy drugs. It's just all these things that they told us a couple of years ago that we were doing, that we didn't even know we were doing, apparently is all fake. And I hope these reports continue to come out. I hope there are thousands of them. I hope people continue to do research on the cryptocurrency space and realize that people are just hoarding their coins and also just constantly buying more. That's all the cryptocurrency space is right now, at least a large portion of it. I don't know what everybody's doing with their money. The point is, crypto is not effective for financing terrorist groups. Thank you very much to whoever wrote this report. Last up, the Winklevoss's are in the news today. Crypto exchange Gemini announced on Monday that it is launching a dollar-backed stablecoin built on Ethereum. Interesting that they built it on top of Ethereum. The Gemini dollar is designed to provide liquidity for users hoping to send or receive US dollars through the Ethereum network. A press release stated, they said it will be strictly pegged to the dollar, with the Gemini Trust Company holding US dollar deposits corresponding to the number of tokens in circulation. Notably, the release stated the New York Department of Financial Services, or the NYDFS, has reviewed and approved the Gemini dollar. To safeguard its holding, Gemini will hold the fiat currency back in the stablecoin in the U.S.-based State Street Bank and insure it through the Financial or Federal Deposit Insurance Corporation, or the FDIC. pass-through deposit insurance program within certain limits. Independent auditor, BPM Accounting and Consulting will review the company's bank holdings on a monthly basis, with Gemini intending to make these audits publicly available according to Market Watch. I hope you're all paying attention to all of this. Gemini co-founder Tyler Winklevoss said in a release, "The Gemini dollar is part of our mission to build the future of money. It is the missing link between the traditional banking system and the crypto economy. Registered Gemini customers will be able to convert US dollars into Gemini dollars and deposit them in an Ethereum address from 10 a.m. Eastern time, I assume. Whatever. Monday, likewise, customers can convert tokens back into US dollars by depositing them into their Gemini accounts." Everything they said is very significant. This is a jab in the side to Tether. They will have a monthly audit, something that Tether does not do. They will have public audits, making them publicly available so that people can see exactly what's happening every single month to make sure that they actually have the money that they're talking about actually inside of an account. And they're also doing it, making sure that it goes through an FDIC insured bank or deposit system so that everything is completely transparent. The US government always knows exactly how much money they have. This is all the complete opposite of what Tether has been doing. Quite interesting to see how this is going to work out. I'm going to assume that this is probably only going to be listed on Gemini for quite some time. But like I said before, it seems that a lot of other crypto exchanges are also either creating their own stablecoin or they're integrating TrueUSD and or Tether into their platforms, as this is seen as a way for people to be able to, cash out of the market or put their money into another crypto should the market start falling down so that they can swap out of that crypto and go right back into the market. Going to be quite interesting to see exactly how many of these are printed and or created, because we know at the moment Tether has billions of them. It'll be interesting. It would be very weird if we enter a time where the stable coins have become so big that they actually end up in the top 20, even though they're not. I don't know. It's all kind of weird. Anyway, the point is, this is now the 12th or 13th stablecoin that has been launched or has been announced to be launched this year. It is bound to happen. We're going to receive a lot more of these. Realistically, I'm going to assume by 2020, let's say, we're going to probably have around 50 different stablecoins on all with different platforms and multiple platforms and stuff like that as well. But the Gemini, I almost said the Gemini twins, the Winklevoss twins, creating their own money has to be something like very significant to them. Not many people can say that they not even created a crypto, but they created their own digital money, kind of almost seemingly out of thin air. Alrighty, everyone, that is definitely going to do it for this video. I hope you all enjoyed. Hope you all are having a great day, morning, afternoon, evening, wherever you are, wherever you might be. I hope it's amazing. Hope you guys are enjoying your day. Thank you once again for watching and or listening. I do appreciate it. And I will talk to you all soon. See you.